So the jobs report just came out. So it looks like the jobs market is booming, or is it? We're going to get into that in this live stream. We're actually going to be going through all the economic data from last month, and it does not look good at all for the Canadian economy, especially with the US economy worsening as well. Whatever you might think about the US, they're the largest trading partner with Canada, and when the US, goes into a recession, that's going to impact the Canadian economy, make it even worse. So this is just a pullback, in my opinion. You've got Canada add 67,000 jobs in October. Actually, quite a good report. We'll get into the finer details a little bit later on, but this is what happened to unemployment. It's gone down to 6.9%. You're looking at the past 3 years here. Does it look like the unemployment rate is breaking the trend and starting to go down? Absolutely not. I mean, just take a look at that chart. It does not look like, it just looks like another pullback. I mean, literally, you're only at March, April of this year. That's all you reversed. So crazy what's going on. And then the Canadian dollar has just been tanking pretty much straight since July now and June. You basically see it top out here around 73 cents. And then it's just been going down, 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 zoom all the way down here. And you take a look at this right now, and it's up on the day on the positive job report, but it's like at a low of the past 6 months. So really insignificant what is happening there. And then what is really significant, though, is that the DXY, the dollar index, has been strengthening. The US dollar has been strengthening. That is not a good sign for the global economy. It never is. That is a sign that something is not right. So it bottomed out and it's now on this uptrend. And what's going to happen is, as I explained in the Canadian dollar video, when the Canadian dollar has been very weak this year, the only reason you got this rally was because most other major currencies were rallying much harder than this. The Canadian dollar was weak when you compare it to like the pound even, or other currencies apart from the New Zealand dollar. So you basically got this rally that was staged earlier this year, but you know, it's just fell straight back down. And now you've got the dollar that is strengthening, and that's just going to push this down further. It's already broke out of this, so it could easily just fall right back down to 68 cents and below. So not a good sign of what's going on. Bonds are interesting because this affects mortgage rates, obviously. So based on the report and what's happened, bonds are actually up on that, 2.39% today for the 5-year. So that's pretty significant. So bonds are moving up. They've actually moved up since the Bank of Canada hiked. Since the Bank of Canada cut interest rates. So the Bank of Canada has cut interest rates, and yes, the market is increasing rates. That's because the Bank of Canada does not control everything. That's what everybody thinks, but the reality is it doesn't. The Fed actually controls the yield curve more in Canada than the Bank of Canada. So people should actually be keeping an eye on the Fed. And the 6-month bond, which tells you where rates are going to be, forget what you're hearing in the mainstream media and all the headlines. You want to keep an eye on the 6-month bond. That tells you where interest rates are going to be. And it's saying it's just going to hold them based off the jobs report that came out today. So not much has changed. Rates are just going to be held. You've obviously had the massive amount of government spending that is now projected with the new budget, which is out. And I saw this. I love this guy on X. He posts some great stuff here. Give him a follow. Budget 2025 projects $2.5 trillion in new spending over the next 5 years, or $100,000 per taxpayer. Today, Mark Carney said the ROI on all this money is $3,000 per Canadian. What kind of retard would hand over $100,000 for a 3% return over 5 years? So yeah, take a listen to this for a sec.
And what this budget shows is that with the $1 trillion of investment that we are going to catalyze, we are going to put more than $3,000 in the pocket of every Canadian by the end of this decade.
Yeah, just a 3% return. Absolutely abysmal what you're seeing going on. And then just before we go through the unemployment report here, I want to show you this. This is consumer confidence. Bear in mind, we're talking about October here for the unemployment report. Consumer confidence has absolutely tanked. So obviously when all the tariff uncertainty was going on, consumer confidence tanked earlier this year down to 45.4. It's now tanked down to 46. And bear in mind, anything above 50 is positive. Anything below 50 is negative. It's been negative for a long, long time. If you look at 3 years, if you look at 5 years here, depths, if you actually pull this out, though, to the maximum here, you can see that consumer confidence is like the lows of during the pandemic right now, or the lows set in 2015, 2016, you know, when Alberta was in a major economic downturn, when you had commodity prices that were plunging, when you had the repo market that was blowing out in the United States. The global economy was not sound then, and it's definitely not sound now. And we'll get onto more of those stats about layoffs, which are just accelerating massively in the United States. The consumer is fucked in the United States. Let's be clear about that. The tariffs were always going to be bad eventually for the economy. People were saying that tariffs are going to be good somehow. Just replace the word tariff with tax. Like taxes, extra taxes are going to be good somehow. That is only the case if the government spends efficiently. And they don't spend efficiently. They never do. So I'm for less government, not more government. And if you're pro-tariffs, you're pro-government, essentially, because that's what tariffs are all about. Taxes are more government, because that's all it does. And the legal repercussions of what's happening with the tariffs, one of my good buddies is a lawyer, and he's a lawyer in the United States. And he said the amount of laws and different things that companies now have to navigate is just completely insane. And obviously all those extra costs, what do? If they can't be passed off to the end consumer, then the business is eating that cost, and then they're going to lay people off. That's just the reality of what's going to go on. You don't have to be an economist or a rocket scientist to work this out. We can figure it out here on this channel, and we always will be, because you just have to think logical here. So the inflation rate as well, Bank of Canada doesn't have a clue what they're doing. I think inflation is probably going to come down. It's still going to be going up. It's going to come down as a result of the terrible economy in Canada, not because of anything good. When inflation, when the economy hopefully finally starts to show signs that it's on the up again, guess what? The fire of inflation will just reignite, and then you will see bonds ripping. And, there's no end in sight for this, especially if you're taking on loads of debt. The low interest rate era that we saw prior to 2020, forget about it. Fucking forget about it. You need to prepare for what's coming, which is deglobalization and protectionism, and unfortunately that's the case. So this is the labor force survey, October 2025. I'll be putting chapters in all of this after the fact so you can get to the parts that you want to get to. So employment increased by 67,000 in October. Sounds absolutely fantastic, doesn't it? Until you start looking at consumer confidence. And I didn't even go over actually, but the CFIB business barometer also tanking as well. So consumers and business confidence is down significantly. But nevertheless, the unemployment report that came out was actually decent. The youth unemployment rate, it actually came down, which is good to see, because I just think that is the most depressing thing out of all the numbers that have been coming out this year. The unemployment rate for youth aged 15 to 24 fell by 0.6 percentage points to 14.1% in October. So youth unemployment is down significantly. And in my opinion, that is good. That's great, because that's not what you want to see. And it's depressing for people getting into the job market. And you're looking at a guy who came into the job market at the worst possible time after the financial crisis. And I know what that's like. And then you layer on top of that, like all the student immigration, everything else that I didn't have to deal with, and that must be just depressing as fuck for these people. So I really, really feel that. when you can't make a break into the workforce, when you can't earn money. It is honestly the most depressing thing when you've just been to college or whatever. And now I want to show you this as well. It's always important to see where the jobs were actually gaining this month. Public sector employees fell 4,200 jobs. And by the way, guys, I mean, this labor report, it's just a directional thing that we look at here, or I look at, would I say, because basically I don't believe a lot of these numbers and I don't take them, you know, at their word and that they're gospel or anything like that, because they're not. Like, it's a survey, it's a telephone survey. It's not the most accurate thing in the world, but it shows us where the trajectory of unemployment is going, which is important. So 4,200 jobs lost in the public sector. That is really good. It's really good there. So yeah, I'm just going to take a little bit of coffee here. I can't cut that out because this is live, as you guys know. So private sector employees here, 73,000 gain. That is a big gain, no question of a doubt. Self-employed down 2,500. But I want to show you this because this is the most important thing, because it shows you what's happening on a longer time frame. So the public sector is growing at twice the rate of the private sector here. You can see it. Oh no, you can't see it. Let me just move that up. So you can see the change here. This is public sector right here at 2.8%, and then you've got the private sector at 1.4%. So the public sector is growing at double the rate, twice as fast as the private sector, which is completely insane. And year over year, people self-employed, like entrepreneurs, that is down. That is down. So that is not a good thing by any, that's just terrible, really, that you've got these numbers. And that is the worst part there. And then if you look at the class and industry, and we're going to get onto some really interesting retail trade numbers. I think they're the most depressing numbers, actually, that I've ever seen. I mean, I kind of laugh at these things to make it more upbeat, because otherwise it is just, quite frankly, depressing. But when you look at what is holding up retail sales, my God, it's depressing. But anyway, wholesale and retail trade, that's where the jobs were. So, you know, at your malls or your shops, you know, middlemen between businesses, things like that. That's what's improving. You've got transportation and warehousing. This is just going to reverse. You guys saw the layoffs from UPS just last week. And it's not just UPS. You've also got Canada National laying off a bunch of managers, and you've got all kinds of layoffs in this industry. And we're going to get onto some of the cargo volumes that are just tanking back down to those April levels. And if it was just those things, you could say, oh, yeah, you know, it's just that. It's just that. But when you actually look as well and you look, oh, consumer confidence, that's fallen a lot. And you look at business confidence, oh, that's fallen. Like it's heading down towards where you had it in April of this year. Consumer confidence, it kind of all slots together and makes more sense. So it's interesting. And then what's down this month is also interesting. You had construction that was down. Real estate was also down, but only a little bit. Natural resource jobs have just tanked so far this year. That industry has just really had a bad time this year. And basically now we're going to look at what's happening across the country here. So pretty much Alberta flat on unemployment, BC up slightly for unemployment, 6.6%. Ontario is down 0.3%, 7.6%. So Ontario is now under Alberta. These two have been going back and forth for a long time. You've got Quebec that is down, one of the lower rates. And, you know, the housing market has been much stronger in Quebec. There's a lot of euphoria there, though. And there's also a lot of investors. So, you know, eventually that will grind to a halt, I'm sure. But also the underlying fundamentals, unemployment is lower than other places in Canada. And then you've got most places. Nova Scotia was up to 6.7% for unemployment. New Brunswick down 0.2%. PEI down 1.2%, should I say. You see, I can't cut that shit out. I just have to live with it. Anyway, Saskatchewan, that was down to 5.5%. You got Manitoba, 5.8%. So yeah, it is. Now, this is what I wanted to show you, the retail sales, because this is just a complete disaster in my opinion. Because look what is holding up these numbers, right? And you'll see it straight away. So in August, the largest monthly increase in dollar terms came from sales of food and beverages, which rose 4.9% compared with the same month in 2024. Sales of packaged food, dry goods, plus 9%, led the gains in the commodity class in August 2025, followed by sales of fresh fruit and vegetables and fresh meat and poultry. And then you've also got motor vehicles. So basically everything people need, a car and food, are the biggest gainers in retail sales. And these things, they actually push up those GDP numbers and they make everything look good. But you know, the inflation rate, as we went through, I got so many tabs open here, but the inflation rate is up significantly. So obviously this is fake. We know this is fake right here, 2.4%. Double it and you're probably nearer to the truth there. And then, yeah, that makes perfect sense why it's up 5%, because the prices are fucking up 5%. I mean, it's just absolutely insane. And then you've got the government that's going to come in and they're going to spend all this money. Well, guess what? All that money is going to go into the GDP numbers. It's going to make GDP look better. That's why I always say, like, GDP, I mean, it means nothing to average person. Who gives a shit what they're saying? Oh, is Canada in a recession? Is it not? It's flirting with a recession. We don't know. Oh, who cares? Who cares? Wake the fuck up. Canada is in a depression for a lot of people. You don't want to be unemployed. You do not want to be unemployed. And that is the reality. Those people are going through like a depression, and you only have to go through all the shit on social media because people make it so public these days. I don't know why, but they do. And the stories are just everywhere, all over social media. Early signs suggest Canada's economy barely managed any growth in third quarter. I mean, pretty much obvious. The GDP numbers, they lag a lot. So we'll have to see what happens here. But it's interesting. You've got it basically down slightly. So real gross domestic product declined 0.3% in August. And early signs suggest the economy barely managed any growth in the third quarter, Statistics Canada says. So is it in recession? Is it not? Like, Canada's going to dodge the recession. You're going to see the funniest clip ever. It's not really funny, but it is to me. But anyway, it's the Bank of Canada being interviewed. You know, they just get interviewed all the time when they're getting paid this amount of money. People think that their words actually mean something when they don't mean shit. But anyway, they were being interviewed and the guy was like, yeah, you know, so you got the soft landing and you got inflation contained. Like, what are these people on? These people are disconnected with reality. Until all these broken institutions get broken, just get broken, or it's the private sector reporting these data, then nobody is going to see the true reality of what's going on. Well, a lot of people will, like people on this channel, for instance. They will see. Many of us saw this coming a long fucking time ago, 2021, when everybody was just going crazy. You remember all the economists were saying, the economy's booming. It's the start of the roaring 20s, everybody. Just strap in. It's just... And it lasted 1 year. 1 year. 2 if you include 2020, but that wasn't really a boom. So you got 1 year and all that government spending to show for it. I mean, just an absolute disaster. And most of that money went to the people closest to the printing press, because that's the reality. That's what it is, the Cantillon effect. Look it up, the Cantillon effect. Very, 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 very important. Excuse me. So monthly GDP for the year, you know, it's been all over the place, a complete roller coaster, up and down, as you can see. So whether the technical definition lines up or not, who cares? In my head, Canada's been in a recession since 2022. It's been in a per capita recession. And the standard of living has been falling, as many outlets have been reporting. This isn't just me saying it. The Fraser Institute, you know, mainstream media places, even like National Post, have reported that as well. So just goes to show what's going on. And then another one, I love this guy. But the Liberals have a plan to invest in Canada, invest in jobs, invest in tools, and build the economy strong. But they've been in power now for a decade and have done none of that. So why would they start now? You have to be pretty retarded to believe this government. You know what? I don't believe either of the status quo parties, to be quite frank. I think they try and portray themselves as being complete opposites when they're actually just next door neighbors. But take a listen to what she says here, because it's just the same type of language that you hear constantly of we're going to have your back and all this BS. And it's like they writ this script, you know, after hours sometime and tried to make it like a poem. There you go. Stand up for you.
We're going to invest in the jobs that Canadians are talking about. They want to take up. Mr.
Public
Speaker,
sector
this is a time
jobs.
when Canadians have pulled together to build Canada strong, and that's exactly what our budget's going to do.
Pulled together. I mean, again, the country is more fragmented than it's ever been. You've got Alberta, they want to leave. Quebec, they probably want to fucking leave. And at this point, most people would be like, yay, see you later. But you know, it's just so divided across the country. So the country isn't united or pulling together. It's complete BS. And I think the political system is such a mess in Canada that really it's like impossible to fix at this point, especially what happened with citizenship and how the votes are now being manipulated. You know, all this immigration that came in, it was all part of votes. And you know, they're just going to make that, it's just going to be even worse in the future. More and more people are going to be voting, and it's going to be voting for the Liberals probably, because they're going to see like the blue party is anti-immigrant. That's how it will be painted by the mainstream media. So anyway, IBM to cut thousands of jobs in Q4. And look at all these layoffs that have been announced. These are global companies. So, you know, they've talked about, like, why are there these layoffs that are happening in Ontario in the automotive industry? But, you know, these layoffs are happening in the United States as well. It's not just contained to Ontario. This is what I always say to people. Like, when you hear a story like that, just zoom out and take a look at a wider view, and you might be able to see that actually it's not just Canada, it's not just tariffs, it's actually a wider problem, which is just the economy is shit. So you basically got UPS, which is like a leading indicator essentially. And if you didn't see my X post, by the way, I should have pulled it up on Wendy stock. That's really interesting. And I hat tip to my buddy there because he was the one who noticed that. And I was like, dude, look at that stock chart. It literally shows like it started tanking in 2007, before January 2007, before the recession, and now it's tanking right now. So Amazon, Intel, Nestle, Accenture, Ford, all these different companies are laying people off. So, you know, clearly there is problems in the United States, but that ain't good for a country that relies on the United States as their customer, like their biggest customer, essentially. It's not good. And you've got the visit count to Las Vegas down another 9%. But you have to look at this. We're now seeing the steepest decline since 2008. Take a look at this chart. So obviously this is just one of another anecdotal indicator on what's happening here, but you can pretty much see how when this tanks, it's not generally a good sign for the economy unless you think this was a good sign. And you know, when these things happen like 2008, what people don't realize is the economists, they'll come out and they'll be like, oh, we're not in a recession in 2009, for instance. But the reality is for average people, that recession drags on and on and on into like 2013, 2014, because I know I was out looking for jobs in that time and it was just not a good time for the economy. You had to be extremely competitive to get a job. And then you've got Richard Diaz here, probably pronouncing that wrong. I just butcher names. But you've got basically, he's saying that the Bank of Canada is just going to hold rates here, pretty much lining up with what the bond market is saying. And, you know, some banks are forecasting rate hikes next year. But don't get like too focused on this, even if you're looking at getting a mortgage, because at the end of the day, they don't control it unless you're just looking at a variable rate, which, I mean, I think it's insane considering what's happened. I wouldn't pay a load of attention to just what the Bank of Canada is doing. You really have to look at what's happening on the 5-year and what's happening across the bond curve there, and that'll kind of show you. And then you've got the private sector shrinks to the smallest share of businesses on record. Better Dwelling put this out, which is 87.12%. So the share of Canadian active businesses, excluding healthcare, education, and social services. And you can see how this has absolutely tanked since 2015 and gone down quite a lot there. So not a good sign at all. And then the last thing I want to go through here is the shipping volumes, because the shipping volumes have tanked again. And again, this lines up with what happened around April. Again, you can see it on this chart. It tanked and you had all the container volume that was down massively. Well, now you've got the same thing happening again. So that is not a good sign for the global economy. There's only so long that they can keep this thing under wraps before people realize that it's just a skeleton under the hood. The consumer is tapping out because they can't afford anything. As we went through with this, like, you've got people are just basically spending more money on the bare necessities to get by. That is not a good economy, but the economists, they can't see through that. You know, they just focus on the headline numbers and they really can't see through it. But it's obvious, like, Canada is in a recession, and the reality is this year has been a transfer from recession to depression, in my opinion, especially those people who are already out of the labor force. I mean, I'll be checking the comments on this live stream, and I've checked the comments on loads of previous videos, and there's like heartbreaking stories of people who've been out of work for years and years and years, especially on these streams that we do about the unemployment report. And it just shows how bad things really are right now. These stories are people that have been looking for work for over a year. Can you just imagine that? Because how on earth do you just pay for all those expenses for a year? Because you just can't. So unfortunately, more and more people are in this depression, and they're going to be losing homes, losing jobs. This jobs report, it was just a pullback, in my opinion, and there's much worse things to come. And that's not because I'm just being doom and gloom here. That's just looking and being a critical thinker and being a realist, and not just painting myself in the land of sunshine and rainbows. So anyway, guys, I want to thank you so much for watching this video. If you've enjoyed this video, please check out this video here, and I will see you in the next one. Have a great weekend.